Hello, do I need to separate accounts for retirement and trading? Swing Trading Analysis of PHM. Well, to answer your question, no, you don't need to separate account for retirement and swing trading. It's good to have a brokerage account with your brokerage firm and have a Roth IRA with that brokerage firm as well if you qualify for Roth IRA. And if you are married, you can both have a joint brokerage account as well. When you start swing trading, it's good you swing trade in your Roth IRA, because Roth IRA, the maximum allowed to contribute to it is between $5,000 and $6,000 a year. So when you open it, it's going to be a small account for sure. But by swing trading in your Roth IRA, you do not expect to pay tax on those trades. So therefore, you don't need to worry about the tax implication, estimated tax payment, and all those things. So at least for the first year, while you are learning swing trading, you are learning the strategy that you like. Maybe you are trying to test different type of strategy you're interested in to see which one you like better. You can do those in your Roth IRA. The following year, or when you are comfortable, you can start swing trading in your brokerage account, if that is what you want to do, because you want that money to be easily accessible for you to tap into when you want to tap into it without having to ask anyone permission or proving that you can touch it, or without paying penalty or anything like that. Then you can do that in your brokerage account, and from that point on, you are going to estimate your estimated tax that you need to pay on a quarterly basis, and know when to pay them as well, and pay them and have a record of those payments. And when you are doing your 1040, you are going to receive 1099 from your brokerage firm that you are going to use to file your 1040. So you are going to pay tax on those trades that you perform in your brokerage firm, brokerage account. You do not pay tax when you buy stocks, but you pay tax when you sell them, and when you sell them for profit. That profit, the government want a piece of it in a form of tax. So, and if you have multiple transactions, you will have a lot on your 1099 to put on your 1040, especially if you file your own tax return, which will be the cheapest route. If you go to a professional or a tax preparer to file your 1040 for you, you will expect to pay more when you are having 1099 due to trading that you are adding to your W2s and all those for tax return purposes. You should expect to pay more to file your 1040. Unless you file it yourself, you are going to spend more time entering those transactions that went to that you did through your swing trade that are on your 1099. You are going to be adding those to to the tax return as you are filing it, so that they can flow to the proper form, probably 8949 and any other form that is going to flow to Schedule D, I think. But anyway, so that is why I will recommend you swing trade in your Roth IRA, so that you don't have to worry about the tax implication. And as you are comfortable with your swing trading, you can start learning the skills of filing your own taxes and what to expect and how to pay estimated tax, and start doing those and do that. And then you can, once you are ready with those, you can start trading in your brokerage account or joint brokerage account. So that is the process I use for our household. Long ago, when we were investing trading, we did it in the brokerage account and Roth IRA. I told my husband that we need to trade in our Roth IRA so that I don't have a lot of trading transactions to enter on a tax return. And stocks that we purchase and hold on to for, more than a year, we did those in our brokerage account. And in our Roth IRA are stocks that we purchased and sold. Those penny stocks that we bought using 52 weeks low and 52 weeks high. We didn't buy and sell them every few days, but we bought and sold, a few months later. So we did those in our Roth IRA, so that I don't have to worry about when I'm filing 1040 have a long transactions to enter in it. And so we pretty much have both that we work on, but we just didn't trade a lot in the brokerage account, so that I don't have too many of those. In 2024, when I start swing trading though, in fact before that, maybe in 2022, is when I decided that we need to grow our joint account so that we can touch it. It's money there that I'm trying to create a stream of income. So therefore, I don't want to do that in a Roth IRA, in a retirement account, because I cannot touch that money. Some people like to call it a middle class trap when people have money, but in some classes that or allocations that are in a vehicle that they cannot touch it, within a certain period of time, or they can only touch it after some years. So we want to have a stream of income, beside our paycheck, and therefore I made that conscious decision to invest and trade in our joint brokerage account. So, and because I want to grow that account so that we can generate a stream of income in it, we didn't even try to put money in our Roth IRA to the max that is required. We just monthly put money in our joint brokerage account to grow it. So, and while we are doing that, we bought dividend stocks, because I started with dividend stocks that we can generate dividend income. But then in 2024, or toward the end of 2023, I started learning different type of swing trading, or different type of trading, and narrow it down to swing trading. And more specifically, by the beginning of 2024 to trend line swing trading strategy. And in 2024, I did short up trend line swing trading strategy. And when I did short up trend line swing trading strategy, we traded quite a bit. When we are taking these arrows facing upwards are arrows where we bought, arrows facing down are arrows where we sold. So we bought and sold every few days. That allows me to practice that strategy and being comfortable with it, but it was a lot of trade. So it was a lot the transactions that on 1099 that I had to go through when I was filing our 1040. So, and that is, that is that. So in 2025, I decided that I'm going to use a long up to a long swing trading strategy where I will wait for the price to pull back to what I will determine to be the value line, and I will buy the stock and just let it be until it goes all the way past the previous all-time new high, and I can decide if I want to sell it or stay in the trade longer and for how long I want to stay in the trade. That strategy allows me to stay in the trade for months, and sometimes I can anticipate to stay in the trade for a few years. So I used that strategy in 2025, and I have less trade in 2025. And I'm going to use the same strategy in 2026. And doing that in a brokerage account, I'm anticipating that I won't have a lot of trade to sort through when I'm putting it in my 1040. But again, it's by doing it and by improving. So that is that. And when it comes to your retirement, even with your retirement account with your employer, if you have a retirement account with your employer, it's good you max it to the amount that your employer will match for you, and that's it. You don't do anything else there. You go open a Roth IRA with a brokerage firm, a brokerage account with that brokerage firm, and continue your investment there. Within your employer 401k or 403b, you are not going to have single stock. Chances that you are going to have mutual fund. Those mutual fund, you can swing trade them. Some years ago, when I started working at where I'm working, at least the first few years, I opened my retirement account quite a bit and trying to see those funds that, first they automatically put me in that life cycle type of fund, which by the way is not something I would recommend, but again it's for people who don't know anything about investment. And quickly I move it out of there and I chose some fund and I put them in it. 3 months, 6 months later, if I recall right, I visited again and I moved my fund to other fund. So I did that quite a bit until I found some fund that I was happy with. And when I was doing that, I usually base my selection on the return since expansion, the year that fund has been around, the beginning year, and the fee, management fee that you are paying. And I like those funds that has been around for a while and has a good return. I like to select those. It took me few trials before I narrowed it down to some specific fund that I was happy with. And I just kept it there. Maybe 2 years ago, I checked it again and I didn't find anything better. I kept it. But guess what? Last year, toward the end of last year, or in fall, I checked the account again and I noticed that the fund that was there, they were different. So pretty much because I've been there for more than 10 years, I think when you are with the employer for a certain period of time, they might, move your account to more a secure, a program or something like that. So, and I wanted to move out of that program, but I couldn't do it by myself. I had to call to move the account out of there. and where they have the account so that I can, choose my own fund. They have very limited funds there that I had to choose from. That the fund that I chose before, they were not there anymore. So I look at the fund that were there, analyze them, because at this point I've been swing trading since it happened, since I was revising those things like in fall this 2025. I swing through in 2024 and 2025. So I said to myself, why not swing trading in that account? So that is what I'm going to be doing, because in the past I randomly change funds based on the return and for how long the fund has been around. And for the fund that they have there for me to choose from, I found that I won't choose for myself if I have other options. So therefore I say, well, I'm going to make the best out of the situation. I'm going to swing trade in my 403B. Again, with the swing trading strategy that we are using, long up to long swing trading strategy, we are buying stocks when it's low and sell it when it's high. So therefore, we are not buying and selling, we are not day trading, we are making those changes months later. So therefore, in your retirement account is going to be mutual fund. A mutual fund, you exchange them. So I took my time using Think of Swim platform, a maximum monthly charge. So you can do that if you have a retirement account with your employer, and put those funds in it, the list in it, and analyze them and pick some to put on my sheet, and from them I select few to start with to allocate my money on. And then when I sell them, I will check the others to see which one is at the value line that I can buy before I even sell. And I will sell again using our swing trading strategy. I will sell after it reach all-time high. So, and you can see that it's relatively new fund. So you can see, and if, let's do an example here. If I did this November 16, we can go to maximum daily chart, because every single bar is a daily. November 16 will be somewhere here, and I don't really know why it tends to do this. For this particular one, so November 16 is a daily chart here. So November 16 will be somewhere here. And I think I'm just going to, because that will be during the weekend and they will do the transaction for me the following day, I'm just going to use this and put my arrow there. Arrows facing up are arrows where I bought, and arrows facing down are arrows where I sold. And I'm going to change the color of that arrow. So that I know that is now our joint brokerage account with my husband. Okay, and we can go to maximum monthly chart. Okay, so it's somewhere there is when I bought it. So right now it's going down before it'll go up. So by the time I was analyzing those things, it's living here, and I bought it because pretty much it came down to the valley line, but clearly it's moving back. and it's okay. And the things using our long up to long swing trading strategy, which consists of buying at the valley and selling after a new high, is when you reach all-time new high, I will sell it. So that means when it passed this level, I could exchange that to another fund in my list that will be, will be at the valley line type of things. This is just an example. So with the type of swing trading strategy we are using, yes, we can even swing trade mutual fund in our investment, in our retirement account. So, and you can swing trade in your Roth IRA, because I'm doing that right now in my Roth IRA. I have, a small account there, and I'm swing trading there, and we are swing trading in brokerage account. You can have both retirement and brokerage account, and you can swing trade in both. Just make sure the strategy we are using, you can count on that strategy to continue making money. So the chart analysis, PHM, that we are going to, the stocks that we are going to analyze today is PHM. And as you can see, stocks, when they have been around, I tend to favor stocks that have been around for years. It's just my personal choice. But anyway, PHM, is it a buy when the markets open? During the week. Today is January 3, 2026. Well, no, it is not a buy. And what is that? We like to buy at those two, either one of those two valley line, and right now is far from it. Where is it coming from? It's coming from the top of the mountain, and it has not got there yet. It could lean somewhere here and continue going up, but this line here is not a stable one for me to rely on to buy stocks with long up to long swing trading strategy. I like to do it on those two, and right now is nowhere near there. So therefore it's not a buy. We can look at it on a maximum monthly chart as well, and this has more. Again, we have the date on the x-axis from the past to the present, and the price on the y-axis from 0 up. So it's very sharp. It has a sharp growth. Climb the mountain to the top, pull back a little bit, and doing that. Excuse me. So therefore, we just prefer to wait and buy this low. So it's not a buy based on our long up to long swing trading strategy. Any other swing trading strategy could be, you could purchase it, but the strategy we are using is not a buy. So that is how we do our chart analysis with the strategy we like to use to swing trade in mind. Thank you so much for watching our videos. We thank you for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi, Liberman Consulting L.L.C YouTube channel, and ninasoap.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. The way we analyze PHM, that's the way we do our chart analysis. If you are unsure, you are doing the analysis well, and you like to practice and ask questions and get feedback, will you please check our online store, Liberman.com, for our small group online workshop to see if you're interested and reserve a spot. but feel free to ask any question you have in the comment section of this video. We will answer to the best of our knowledge. So thank you so much. More videos in this series can be found in the playlist in the description of this video. How to start swing trading step by step using long up trend line, and we have other playlists as well related to swing trading. Thank you for your time and good luck with your swing trading.